very respected Chairman of the region, my good friend, CA DC Jain, the Supportive Secretary of SIRC, CA Abhishek Murali, the Speaker of the first technical session, CA Vivek, professional colleagues, friends, very good morning to all of you. Bank audit is one of the important assignment for our professional fraternity. I am sure current year bank audit is going to take more importance since lot of developments happening in financial sector across the globe. Keeping this in mind, our DC, that means the dynamic chairman, organizing more and more programs for the betterment of our profession. My personal compliments and congratulations to our chairman, DC Jain, for his active involvement in organizing various programs. In fact, as soon as the COVID-19 lockdown announced, immediately he has arranged webcast through SIRC to keeping our members updated. ICAI PDC committee 6 to 7 times discussed with various regulators like RBI, CMDs of respective banks, central statutory auditors, and they explained the importance of bank branch audit. ICAI taking great steps to safeguard the interest of the banks as well as other stakeholders. Today we have with us the chairman, speaker, secretary, everyone is there. So now I request chairman of the region to give welcome address to the professional fraternity.
Thanks, Jalapati. So the saga of our knowledge dissemination continues even during the lockdown. This lockdown has locked a lot of things, but not the sharing of knowledge, and we are continuing. I would also like to tell all the viewers that NIRC of ICAI is also telecasting this program live to their viewers. So there's a parallel viewership, a telecast going on in SIRC channel as well as the NIRC channel. And there are a few updates which I thought I'll share with you on the institute's front. One is the institute has come up with a small announcements on the usage of electronic signature, that is the digital signature and the validity. I'll request all the members to kindly go through that, because now attaching DSC in lot of audit reports and the certificates will be valid. And the no objection certificate, which was hitherto only allowed if you are sending it through registered post, they're going to allow it through email mode also. The previous date was 1st July 2020, but seeing that the lockdown is happening and it might require getting NOCs even earlier, the date has been advanced to 1st April 2020. Institute will be coming up with a small announcement shortly. And on the membership fees front, Institute has given an option to pay the membership fees for 10 years, which I request all the members to kindly make use of. And the advantage for this 10-year fees is, even if there is an escalation in the fees, the member doesn't have to pay and his membership will be intact. It won't be affected. And one more thing is, if there is a break in membership for more than 3 years, the member in future will have to write some exam to restore his membership. So it is very careful that members keep track of the membership fees and pay it on time. And on the elections 2021, which is going to come, Institute has come with a new rule that a member will be eligible to vote anywhere in the southern India or in their own region. So there's a new initiative which the Central Council has brought, and we were able to get to know this through our Honorable President C. Atul Kumarji, and we had a limited interaction with him. And even if you want to vote in some other region, prior permission is required, but within the region, no prior permission is required. You can walk into any booth of the Southern India region and kind of vote. And another front is on the virtual courses. Institute has started a lot of virtual courses. In fact, there has been overwhelming response. Few people have not been also able to get their registrations, but there are various courses done, and the Institute is thinking of increasing the batches for the benefit of the members. So we would like to tell members that you please take benefit of all these initiatives of ICAI and SIRC. Jalapati, over to you.
Yeah, thank you, Chairman. Now I request the Supportive Secretary of SIRC, Abhishek Murali, to give address to the members.
Thank you, Vice Chairman CAK Jalapati, who is joining us from Coimbatore, Honorable Chairman of the SIRC, the dynamic CA Dungar Jain, the Speaker for the day, CA Vivek Krishna Govind, who is joining us from Kerala. So we have a truly spread speakers who are here today. I am joining from Chennai. Our chairman is, of course, joining from Madurai. And we're very happy to be organizing this program on, once again, it's on bank audit, but the chairman on various discussions that we've had. And we've been doing many programs, as you may be aware. It is available on our SIRC YouTube platform and our SIRC Facebook page, where you can see the programs we have been doing. And we've got such a wonderful response from all the members who have been watching. In fact, I'm very happy to say, on an average, almost 7,000 people are watching our programs. And it has been an excellent we thought COVID would be a challenge, but the chairman has taken up the challenge and converted it from a stumbling block into a stepping stone. And this has been a great turnaround. And we have been on the ball, constantly looking at the feedback, even the comments which are coming in the YouTube page. We are always viewing it. And the chairman, in his wisdom, based on the feedback we have got, felt that we need to have a program for foundation of bank audit. For people who are new to bank audit, first time bank audit doers, for all of you, we felt that we need to have a program. And even there may be experts or experienced people who are watching this. It's in order to create a strong foundation. As I repeatedly say, when you are grassrooted, you cannot be uprooted. So this is a great way to reinforce the basic principles of a bank audit. And I once again thank our dynamic chairman for organizing this program. Before I hand over the mic back to our Vice Chairman, CAK Jalapati, I would like to share a few announcements of the upcoming programs. Today's program is on bank audits. We have another session at 11:30 a.m., which will be done by CA Ismail Sonawalla, who will be dealing with advances and IRAC norms. At 2 p.m., CA Anand Prakash Jangid will be joining us, and he will be covering CBS and other aspects in bank audit. On 27th of April at 11 a.m., we have a session called Audit in Time and the Need to Innovate as an Auditor. This session will be handled by the very experienced CA PK Ranganathan, who will be joining us for that program on 27th of April at 11 a.m. More importantly, just yesterday night, our dynamic chairman has finalized these two very, very good programs, which are scheduled on May 1st and May 2nd. On May 1st at 11 a.m., we have CAT Bhanushekar, who will be addressing on the income tax session based on penalties under the Income Tax Act. And he will be covering the latest amendments which have been announced by the income tax authorities and the government as well, pertaining to these aspects. On May 2nd at 11:30 a.m., along with the AASB of the Central Council, we have CA G. Shekhar, who will be joining us along with past President CA Amarjit Chopra, who will be addressing us on May 2nd on overview of bank audit. This is at 11:30 on May 2nd. This program is in consonance with the Auditing and Assurance Standard Board, and CA G. Shekhar, Central Council member, will also be joining us on that day as he is the chairman of that session. With this, I once again welcome all the viewers for today's program, and I hand over the proceedings of the session to our also dynamic Vice Chairman, CAK Jalapati.
Thank you. Thank you, Abhishek. Friends, today we have with us one of the great speaker and the past chairman of Ernakulam branch, which is one of the most active branches in India. He is the senior partner of Messrs. Verma and Verma Chartered Accountants with more than 20 years of experience in various areas of audit, taxation, and management consultancy. He is a certified information system auditor, USA. He served as a chairman of Ernakulam branch of ICAI during the year of 2010 and 11. In addition to ICAI, he has served various social organizations like Kerala Management Association, Rotary Club of Cochin, Kerala State Council of Confederation of Indian Industry, Kerala, and etc. He was nominated to the top 50 youth icon of Kerala. He is the visiting faculty for various premier management school in Kerala. Despite of all those things, he is the very, very soft-spoken and a very humble personality. With these few words, I am very much happy to introduce CA Vivek Krishna Govind to our professional fraternity. For another 2 hours, he will address in the topic of audit planning, documentation, and LFAR, which is the most important topic to discharge our duties in bank audit for effective manner. Members, if any queries, kindly post in your comments in the comments box. After completing this session, we will clarify all our doubts. I welcome CA Vivek sir. Thank you, sir, for joining with us. Now over to Vivek sir.
Thank you very much, Chairman of SIRC, CA Dungar Jain, Vice Chairman Jalapati, Secretary Abhishek Murli. All three of you are good friends, and it's a pleasure to be back at an SIRC platform in a very different, turbulent world that we are in. But nevertheless, this is very, very interesting that we are all continuing to interact so closely. And over the last several years, I've been having the opportunity. All of you have been inviting me to speak at Chennai at the bank audit seminars, and we have this very grand meetings at the Taj Coromandel and with a very large audience in attendance. And it was a very different experience then. But today, we are sitting in the comfort of our homes, and probably a much larger viewership and audience would be able to interact with us, would be able to join in this session. And I think I must say that despite all the challenges which we are facing in the current time, I think all of us are coping quite well, and our profession has been moving in very much the right direction under the leadership of our president and vice president, and the very, very dynamic team at SIRC led by my good friend DC Jain. So let me move into my topic directly. It's again very, very interesting, because it's the first time that the topic has been framed as audit for first time bank auditors, which I found when the chairman spoke to me on that. I found that, because usually we have sessions on advances, LFAR, CBS, and other aspects, etc. But this time he said that the first session, you need to work on it in such a manner that it's easily understood by people who are going to be doing it for the first time. So probably a little more of discussion on the basics, on planning, on documentation, etc., which are very, very, very important in our profession. But probably because of the manner in which we are probably forced to do the branch audits, because we get 3 days, 4 days, etc. What happens typically is that our focus is on 3-4 aspects, and then we go there and all our energy is spent on those aspects. Whereas these are things which sometimes takes a backseat, and so it is very, very important. And I must say that I greatly appreciate the SIRC team for thinking one step ahead and ensuring that our members are protected, because I'm sure all of us in profession would agree that audit planning and audit documentation are extremely important in the present times that we live in. Very difficult times for all of us, both be it industry or for profession. So regulations are getting tighter, and the scrutiny of our professionals are getting to be more and more with a microscopic view. So given those factors, it is very important that we have all our plans and our program sheets and our checklists and our documentation should be pakka, not just to convince our peer reviewer or to convince the quality review board members or anything like that. But as professionals, we have been told, the essays are very clear as to how we need to be going about doing our work. And it is important that not just that we do it according to the essays, but that we also document it accordingly. So I will be, in most part of my presentation, I will first quickly run through some of the important aspects of audit planning and documentation. And thereafter, I will focus all my energy on LFAR and some of the issues in LFAR, simply because I see LFAR as an important tool both for audit planning as well as for audit documentation. Sometimes what happens during the course of audit is that LFAR, verification of LFAR and filling the LFAR becomes a little mundane, becomes a little too routine, and just as a matter of practice, by the end, when the audit is over, somebody junior fills in with the yes, no, not applicable kind of replies, and the senior just quickly looks at it and clears it. We have seen that happening. I'm sure many of us who have had the opportunity to handle central audits, we have also discussed it at the management has also been discussing this with us as to, why is it that branch auditors are not, applying enough diligence when the LFAR is being done. So this is an area of great concern. We must understand that the long form audit report is a very, very important and critical part of the bank audit, and it's not just the branch audit report and the tax audit report that is important, but the LFAR is also equally important, and which is why we will be spending a little longer on LFAR. And what I will try and do, since my topic is also on planning and documentation, I will base the LFAR as the document on which our audit planning and our documentation also needs to evolve. So I'll straight away move on to my presentation. So can I have that screen shared, please? Is it visible to all of you?
It's visible. You can proceed. Yes, yes.
Okay. So this will be my presentation structure over the next hour and a half or so, and thereafter we can, or probably a little less than that, and we can have some interaction once the presentation is done. The structure that I have been informed by the organizers is that we will first go through the entire presentation and thereafter take a few questions, which I'm sure are coming into the comments column. Right now, I'm not able to see the comments column, so I would request one of you to probably compile the relevant questions and we can take it once the presentation is over. So this is my structure: the introduction, planning, documentation, LFAR, some concerns, some of the controls and suggestions at the branch level, and finally the conclusion. Now, what really is the responsibility that we have in a bank audit? The expectations are very, very high. This is what we must understand, that the responsibility of several stakeholders from an auditor is extremely high, and hence we must keep in mind that the bank audit that we do should be done with absolute commitment, with absolute conviction, and with absolute independence, be it at the central audit level or at the branch audit level. The branch audit is as important as the central audit. I think that's something which all of us who are handling branch audits, we must understand that the central auditor is so dependent on the branch auditor. Now, if you take a bank like SBI, which had close to, let's say, 25,000 branches, how much can a central auditor do? There are 13 or 14 central auditors who are handling various areas of consolidation at the head office level, who are completely dependent on the branch auditors. So it is a bounden duty of the branch auditors to ensure that we live up to the expectations of our own fellow professionals. There are certain rules and regulations which are in place, which are a little different from the other audits that we do. We must understand that. We are very comfortable with the statutory audits of companies or firms or tax audits and internal audits, etc., because that is where our probably 90% or 95% of our time is spent around the year. Whereas the bank audit happens only a few days in the month of April, or this time probably in the month of May. Hence, it is important that we understand and that we are up to date. Round the year, we need to be up to date about what are the new circulars coming, what are the new notifications which are coming, and what are the new amendments which are coming, which would affect the audit of a bank. So the expectations from RBI, from ICAI, the government, the public, we are seeing the kind of public outrage when a bank is going through a crisis. Immediately, the auditors are amongst the first set of people at whom the fingers are being pointed, along with the board and the others concerned with running the bank. Thereafter, immediately the next set of people who are blamed for a crisis is our members of our profession. So we need to understand that is the level of expectation which is there, and that extra pressure is good for us to ensure that we are always on our toes. Now, a quick overview of the banking sector. The total deposit size is a little less than $2 trillion. The banking sector in India, I mean. Total loan size is around $1.2 trillion. The total turnover, all banks put together, is about $160 billion. And total branches, about 1.2 lakhs. Probably some branches may reduce now that there have been some mergers of banks. So probably it may probably rest at around 1 lakh branches after a year or two. Now, moving on to my first part of the presentation, which is on audit planning. I'm not going to be talking on the essays per se, because I'm sure all of us here are very much well versed in standards on auditing. And if I'm to get into a session on essay, that itself would need a separate session. So assuming that all of us are on the same page when it comes to knowledge on essays, let me get into specific aspects related to audit planning from a bank and a branch perspective. The guidance note on audit of banks is one document which is getting updated every year. A lot of effort is going into the team at ICAI is taking great pains annually. There are not many documents, by the way, which an annual updation happens. But this is one guidance note which gets updated annually. Several teams of council members and other experts from different parts of the country come together, work together to ensure that the guidance note is up to date, and on any aspect of our bank audit, when we are stuck or if we are in doubt, this is one document which we must refer. So please ensure that not just the chartered accountants, but all the audit team members are having a copy of the guidance note, and that they have prepared for it. That they before they start the branch audit, please tell them to learn up about relevant areas which are, at least from a branch audit perspective, whatever areas are relevant in the guidance note, please tell them to go through it so that they're better prepared to take up the audit. Next aspect of an audit plan is to identify some preliminary data. This is sometimes, typically what happens sometimes is that, a team just goes in, we've got the appointment and our team just goes into the branch on April 2nd or 3rd or 4th, not knowing anything about the branch and not having compiled the preliminary data. And then it takes us 2 days sitting in the branch to pick up those important data. And by the time we've got an idea and feel about the branch, it's time to close the branch. The pressure starts. So central auditors or head offices pushing, corporate offices pushing, branch managers will immediately start applying pressure on us at the branch audit. So this is in that sense very different from the other audits that we do, because many a time we may be handling a branch only 1 or 2 years, and it needs to be started immediately after the end of the year and needs to be closed probably 5 or 6 days later and signed off. There would be very few other audits which we would be having to do in such a short timeline. Hence, our entire audit planning with respect to a branch has to be very different from how it is vis-a-vis our other audits that we do. And one important aspect is to gather preliminary data. I'll just, in another slide, show you some of the data that can be compiled. And this data collection should happen at least a week before we visit the branch. Don't go there and call for this. Ideally, the moment we get our appointment letters, we know which branches we are going to handle. And try and call for this data at least a week before, so that ideally, if you can get the data before we start the audit, great. If not, at least they'll keep it ready when you go. At least when you visit the branch, 70-80% of what we've asked for, if it's kept ready, then that gives us the opening material to start our work. And branch also understands the perspective of the auditor. We must also understand from their angle. Branch managers also have to face different auditors. Unlike in other companies where we may be auditors for many years, or now thanks to rotation, probably every 10 years or 5 years there is a change in auditors. But otherwise, but even in those cases, at least for 5 years, they are going to more or less see the similar set of auditors. So after the first year, then they get used to it, understanding the style of functioning. But here it's very different. They have no idea about what is the methodology and the way in which this branch auditor is going to look at it. So giving this preliminary data requirement would really help them understand our thinking also. Now, third important aspect is the closing instruction manual. Now, every bank has very unique, distinct closing manuals. Now, it's important that we understand that. In case we have not got a copy of it, please get hold of it at the earliest. Usually, it is sent along with the correspondences from the bank or from the branch. But if it has not come to you, please request for it and get it, and understand the manner in which the bank's closing instruction manual has been documented. What are because again, each bank is distinct. Each bank is unique. The reports which are maintained in some of the banks are different, especially if the software used, let us say, if it's running on a Finacle platform, then probably most of the Finacle reports would be similar in banks which use Finacle. But suppose somebody else is using an Oracle or any other software, some banks continue to have indigenously developed software which they have evolved over time. So the reports which are generated are also different from bank to bank. So it's important that we understand the closing instruction manual instructions of our bank. Review the previous reports, both the branch audit report as well as the LFAR. I'll talk a little more about it in subsequent slides. The latest RBI circulars is very important, especially in the current scenario. We are aware March 27, there is a circular. Many things have been brought out in that. April 17th, another circular. A lot of important announcements are there in that. I'm again not getting into that because I'm aware there is a separate session on that. So I would not like to encroach into that territory here. But it's important from a planning perspective that we read up on all the latest RBI circulars, understand that, discuss with fellow professionals, and attend meetings of this nature. And thanks to ICAI, both at the central level as well as at the regional levels, a lot of interesting seminars by various experts who have domain knowledge of from both an experience perspective as well as a technology perspective. A lot of speakers are being invited and good programs are being organized. So please let us all attend. And this is a learning. This is a learning for you. It's a learning for me. It's a learning for all of us. Preparing for this is a learning for me. And I'm sure the Q&A will also benefit me a lot because I'm sure there are a lot of seniors here who can give guidance on various things in which as professionals we should all collectively look at improving the quality of work, and it's only through interactions of this nature that we can do that. Next point is understand what are the list of audit deliverables. Now, this is another problem that we see. Many a time, we know that the branch audit report is necessary. We know LFAR is necessary. We know that tax audit report is necessary. Some mandatory certificates we know. But then in certain banks, there are specific requirements. And these things pop up on the very last day. When you're about to sign and when we are about to close our audit, suddenly the branch manager will bring another half a dozen certificates, saying, "Sir, these certificates are also to be signed by you." We may not have even seen it and verified it. Then we have again, get back to it, look at it. Obviously, we cannot sign off based on, he will say, "No, sir, I've looked at everything, I've signed, this is only a routine." We can't accept any such thing. Let's be very clear. Times are bad, and as auditors, the first and most important thing is that we must very thoroughly review and audit every document before we clear it, and every certificate all the more because it's true and correct. There is no true and fair also in certification. So we have to probably one step beyond what we do for audits is what we need to do for certifications, and hence my request is please do not dilute any procedures when we are issuing certificates. And the appointment letter, see what are the contents in the appointment letter. Many of these certifications in the banks, probably even in the appointment letter, it may be mentioned what we need to. So read it properly and understand it upfront at the time of planning itself. Have a proper engagement letter. Get the no objection, NOC from the certificate, no objection certificate from the previous auditor. These are all very important. Some of these have to be done prior to starting the audit. So these are the important aspects. So I just what I thought, at least a few things which I thought we should do pre-audit, just listed it out here again. Once again, just to reiterate what I have said: appointment letter, ensure it's received, have a proper time budget, planning document, risk analysis. I'll just get into those in subsequent slides. Go through the RBI circulars, identify critical areas, communication with the branch managers, communicate the list of requirements and agree upon dates. And just, I'll give you, I've more or less covered it earlier, but just put it separately so that you can understand it. These aspects, please try and do it pre-audit. And what are the preliminary data requirements which we would seek from the branch? Just a sample. Obviously, we can add more or delete according to whatever our audit procedures are. But my own reading of the situation would be that, let us try and understand it, because every branch, there are a few high-risk accounts. There are a few watch-listed accounts. There are SMA accounts, be it SMA 0, 1, 2, or, get the list of those accounts which are, in our language, probable NPAs or potential NPAs, as we would call it. Get hold of those accounts. Look at the list of letters of credits which have devolved and bank guarantees which have been invoked. Look at accounts which have been upgraded during the year or the quarter that we are auditing. These are to be looked at, because there are certain terms and conditions for upgradation of an account. So we need to ensure whether the terms have been complied. Look at other reports. Various reports are there. Again, I'll come talk about it in a subsequent slide, but ensure that we've gone through those reports. A lot of external audits are happening, inspection is happening. There's going to be credit report, there could be an IS report, there could be concurrent audit report. So get hold of all these copies and read, understand what are the discrepancies observed by each of these auditors, because we must understand they are also fellow professionals and they have looked at probably spent more time on that in that branch than what is available to us. So we should pick up all those observations and see how to what extent it will affect our own audit. Then the limit-wise, party-wise breakup, and which are the new loans which are sanctioned. Again, very important from the perspective of the branch, which are the fresh loans sanctioned. And contingent liability, which is again very, very important because all the unfunded limits, bank guarantees, etc., are lying in the contingent liabilities, about which I'll speak when we get into the LFAR. And again, important. Now we've all come to understand, and we've all evolved and moved to a regime where audits are to be looked at from a risk perspective. In the conventional audit mechanism, probably we weren't giving as much importance to risk assessment, but over the last few years, we have also evolved our methodologies. And so it is important that key audit risks are identified. RBI has also changed the way in which they function, and their assessments and supervisions are also risk-based supervision, risk-based audits, etc. They have also evolved their methodologies. And so in case we are not really well-versed with this, then it would also be helpful if we can spend some time reading, understanding how risk-based audits work in banks. I'm sure that is again a topic for 2 or 3 hour discussion at least. So I'm not really going to get into that. But from a bank's angle or a branch's angle, these are some of the key risks. Recoverability of assets, obviously, that's the single biggest area in any branch. Compliance with guidelines, internal control systems, how robust it is. Critical stationery, which includes checks and travelers' checks, DDs, etc. The physical control over the critical stationery. Interest income and expenditure accounting and completeness of the accounting. Suspense accounts, very dangerous again. We'll again talk about that when I briefly touch upon it during the LFAR discussion. Planning, again, we spoke about this earlier. Please look at all the reports. I'm sure all these reports would be there in almost all the branches. Even if they tell you that the copies are not with us, it is with the head office, they have not sent it to us. RBI has given some observations which are relevant, but it does not come to our attention. They may try to dodge you. I think that's something we need to understand, because they have also been told that the audit has to be finished in 4 or 5 days. So many a time we see that the perspective of the branch manager is to somehow get rid of us. Moment they'll be very nice to us. Some of them would tell us that sir, this is a very nice place. There are a lot of temples and churches and mosques here, so we'll take you there and let's go for a pilgrimage. And there are mountains here, it's a hill station, resorts here. So half day you look at the branch, rest will take you around the city. And that's one way in which some branch managers will handle you. Some of them will be very aggressive. They will tell you, no, this information nobody has asked for before. This is not relevant. It's because you don't know how to audit. We've heard, we've seen different kind of people, especially they will try to intimidate our juniors, some of them, by saying, nobody's asked for it before. How are you doing it for the first time? You have not understood, so you go learn. These are various strategies which they may use, but let us not get perturbed by any of that. Keep our cool, be balanced, be very professional. Tell them we are fine, we understand, but we are also learning, yes, but nevertheless, insist on what needs to be done and get it, no matter what, irrespective of what strategy they may use. Let us be very clear that this is what we want, and if we are not getting it, ensure that that it's put on record that that you called for this information and it has not been made available. Okay, so that's my first part on planning. Next, I'll move on to audit documentation. Again, documentation is the need of the day, and I think one area where many firms and professionals are facing difficulties is in ensuring that our audit documentation is maintained well and done systematically and in an organized manner. This is one problem which we face in profession, and which we discuss at various platforms which we've been discussing, and a lot of extra steps have been taken by our institute, and a lot of help being given in terms of tools which are available now for documentation. More technology tools and more software platforms, etc., are now in place, wherein we can not just have our physical documentation, but we can also look at various ways to improve it by having online or documentation on the system. So let us consciously, before I get into the specifics, my request is this needs to be a priority for us, because again, we are there only for 4, 5, 6 days is all that we are spending in the branch, and all our priority will be to look at the advances very aggressively and look at all the other critical areas and get the job done. And many a time what happens is that the branch audit documentation is really not up to the mark. I'm sure all of us would agree that this is the way it is. But it's about time that we understand that this is really an area of concern. God forbid, if there is a problem and if one of the accounts in a branch that we have audited, or there is some suspense account in the branch, or there are some other money laundering problems which have missed our attention, which are rooted through this branch. We saw what happened with let's say Nirav Modi instance and all that, where one branch of PNB, it was rooted through the letter of undertaking and all that, and something which missed everybody's radar, and the amount of later to try and establish that the auditor has done his job was really not easy, simply because our documentation is probably not up to the mark. So this is where we must take that little extra effort from the commencement of the audit. We must understand that we must have proper training sessions to our audit team, because typically 90% of the audit documentation gets done by the team who's handling it. So if we as partners or assignment signing partners, if we are not serious about it, then the people who are handling the audit will handle it in a very, very lackadaisical manner, and there will be no checklists in the file, no program sheets in the file, no proper audit trails, or no very, very disorganized manner. Some papers will be bunched together, and that's very dangerous. So please take that extra effort to ensure that audit documentation is a priority. Ensure that the engagement letter, the no objection letter is in the file. Ensure that all the the documents wherein we've asked for for providing evidence, get that. Area wise, we would have sought for information whereby evidence is required for our files. Please ensure that each of these areas separately flagged, separately tagged, serially numbered, signed off by the people who are handling the audit. So when an independent person, if he or she looks at the file, should be able to understand the entire audit methodology followed without any of us sitting in front of him or her. That's how the audit documentation should be. So please ensure that is there, that all such documents are there. And if certain information is not given by the branch, or if the branch is not ready or only partially ready, or if there is a non-cooperation from the branch management side, please document it, communicate it, send letters to them, get responses from them, keep it in our file, because tomorrow all these things are going to be important if there is going to be some sort of scrutiny of our work. Extent of check applied. Sorry. The minutes of all the important discussions held with the branch management, critical issues, what are the issues, how they were resolved. This is another problem that we see. Sometimes when we go for a peer review or QRB, etc., a lot of issues are raised by auditors, but it's really not clear from the files as to how were these actually resolved. What extra document was given to us, or what view was taken for, how did we dispose of our points or the critical issues is so important, because otherwise it can create much bigger issues for us. Because the large issues there, we have seen it, we have documented that we've seen it, but the file does not speak for itself as to the resolution. It's extremely dangerous. So please, as a partner, let us take that extra effort as a signing person, proprietor, or as the person who's responsible for the test function. It is our job to personally ensure that all the issues raised are resolved and documented in a very, very systematic manner. The internal control systems, I'll get into that when I talk about the LFAR, because LFAR is basically an internal control questionnaire. Responses, queries that we raise, the response, obtain management representation letter. Again, that is not seen in many, many cases. Why is it that we are not, for statutory audits, we are insisting on management representation letter or letter of representation. Why is it that we are not doing that in the case of branch audits? Why do we have to feel that these things are not required for a branch audit? In fact, it is more dangerous for a branch because there is no continuing relationship with them. You do it one off and it's over, and a few months later, if you realize you don't have a management representation, and by that time, if you try to go back to the branch, by then the manager would have got transferred and the new person does not know you, you don't know them. It would be very difficult to try and regularize your file a few months later and all that. So do it as and when the audit is happening and sign off on all those letters. Get all these copies before you sign your audit report, because once you issue your audit report, then thereafter, then it's not going to be easy to get any kind of document from the branch. Now, these are the 3 audit reports which we have to issue. Then, of course, there are other certificates, etc., which about, again, as I told you earlier, it could be depending on the kind of banks, particularly in large PSU banks, number of certificates are more. Smaller banks, it's less. Cooperative banks, still less. So it's case-to-case basis. I'm not getting into the certification side. My job is only on LFAR as we move forward, but I just thought I will bring out that these are the 3 reports, audit reports, which we issue. The branch audit report, where we talk about the true and fair aspects of the branch and regarding the operations of the branch. The other certificates are also forming part of that, and the memorandum of changes, for those of you who may be handling it for the first time. MOC is where we have a disagreement with the branch, because what we must understand is in a branch, the entries are passed and frozen. Thereafter, any changes, whereas in a typical audit, if we have to make some provision entries or make some rectification entries, we are able to go back and pass those entries, etc., journal entries or otherwise. But in a bank, the system gets locked. So any changes that need to be made has to be passed through what is called a memorandum of changes. So our entries with narration and what the entry is meant for, etc., should be clearly highlighted, and the MOC has to be passed and forwarded by the branch auditor to the statutory central auditor, and the central auditor consolidates all the MOCs and passes it into the main system. So that happens only at the central audit level. So the branches entries are not getting passed into the system. Later, it's intimated from there, if necessary, at branch level. If entries are needed to be passed, it's intimated by the head office and thereafter passed in the subsequent year. LFAR is where our discussion will be. I'll move on to that. And the tax audit, obviously, all of us know Form 3CB and annexures. So now I'll move on to we spoke about audit planning first. We spoke about audit documentation next. It's 9:45 now, so probably next 30-40 minutes, I'll try and cover the salient aspects of the long form audit report. So what really is a long form audit report, and when was this introduced? Just to give a historic background, 1985 is when RBI introduced this, and what was the purpose behind it? Because the Reserve Bank at that point felt that the internal control weaknesses and other aspects or some suggestions, etc., which the auditors need to give, that was not happening in a proper manner, because the branch audit report is a typical audit report with the true and fair certification aspect alone, and they're not really getting the opinion alone. There, it's only the branch audit report is where we express our opinion, whereas in LFAR, the intent is that we need to communicate to both RBI as well as to the board of directors of the bank as to what are the weaknesses in the internal control systems. Last amendment was in 2003, which is actually, it is quite unfortunate, because the way I see it, LFAR is a very, very important document. And I'm sure all of us would agree that the changes that have happened in the banking system in the last 16, 17 years has been phenomenal. But unfortunately, the LFAR has not been amended to reflect the current reality. Hence, the thrust on technology or digital environment, etc. Such things are just covered in a very, very, very brief manner, somewhere innocuously. Whereas if an LFAR is to be drafted today, I'm sure it would look very different from what it was. But nevertheless, we must say that that this is at that point there are a lot of vision has gone into documenting what are the control weaknesses, and it's a very good internal control questionnaire and a checklist, and a very, very important tool for us from an audit planning perspective. So this is where I will connect it back to my first topic on audit planning. How do we use LFAR as an audit planning tool? The contents of LFAR, point by point, I will get into it during the course of my presentation. But it is important that through the LFAR, the auditor must gain a proper understanding about the internal control systems and procedures of the bank. What are the instructions being given by the head office and also by other statutory authorities? And what is the organization structure, delegation of authority, etc. These are things which should not otherwise be part of our verification if we were not to issue an LFAR. And hence my humble request once again is, please look at LFAR as a very, very important tool for audit planning, and not just as a routine yes, no, not a NA kind of filling job. Instead, use this upfront before we start the audit, all our initial discussions, all our training meetings at offices. When we do that with our staff, audit staff, please ensure that there is a segment for LFAR, because this is as important as anything else. Trust me. While I would definitely say that verification of advances is the most important aspect when it comes to branch audit, because that is where the significant part of the assets are, that is where a significant part of the risks of the bank are. All of that, I'm sure all of us would agree that advanced verification is the largest chunk of time where we all use our mind and intellect. But LFAR is so important, and it is so helpful if we are to use it the way it's intended to be used. Yeah, I already spoke about that. Get all the information and compile this earlier. Please circulate the LFAR also as part of the pre-audit. Get the preliminary observations. Even if it is not don't tell them to fill an LFAR for you. Please don't do that. But then branch has filled up an LFAR and we are signing off. Please don't do that. The relevant questions where we need some responses from them, put it up as some form of a checklist or a questionnaire to the branches, and get their detailed responses, and then apply our procedures to it, and edit it accordingly, and in our own way come to conclusions. And the draft of the LFAR should be written in our language, and not. We are seeing this many a time where the LFAR is being prepared by the branches and just signed off by the auditor. Please don't do things like that. Review of past reports, we've already spoken about. Now, before I get into the line by line of LFAR, let's just understand the basics of LFAR. Let's be clear, because this is a session on basics, a session for first-time auditors. I would not be getting into any of these slides in a normal discussion on LFAR, but reason why I thought that I will bring in 3-4 slides on basics is because LFAR is a very different document from what we give. There is no LFAR that we give for any other audits. We don't sign off on internal control questionnaires and as a certification or as part of a signing document in any statutory audit that we do. Probably when we handle internal audits or other assignments, management audits and all that, probably we may sign off on the internal control. But LFAR is the first document per se, and let me say, to some extent, this could have been the base on which subsequently now we have the IFC. In 2003, the LFAR came in, and today we have the IFC for the statutory audits. The basic document on which the IFC would have imbibed that okay, fine. It is important that the auditor, the statutory auditor, has to also look at control activities. That thought, I'm sure, evolved from the LFAR. So let's be clear, that the LFAR that we sign off from for a bank is a very unique document, and we do this only in banks. This is not like the IFC certificate that we issue in. So let us not tell ourselves that yeah, we've been doing the IFC part of the audit report also, and so this is only a document like that. It's not like that. It's a very unique bank specific document, so it's not to be I've heard this discussion, which is why I thought I should share this with you. Anyway, the IFC is there, which we are issuing. So how different is it is an LFAR from an IFC? It is different, because even in banks, etc., the IFC framework is prepared separately. There is an IFC framework which is being done by the bank probably, or done by some other professionals for the bank, and verified by the auditor. But what is called for in an LFAR is different from what is called for in the IFC. So that's big. I just wanted to clear that distinction between the two. Similarly, there is a distinction between the main statutory audit report and the LFAR. These are two independent, unrelated reports. We are hearing comments, and we are seeing many a time when we look at it that comments which should form part of the main statutory audit report are getting reported in the LFAR, and vice versa. That should not happen. What should come in LFAR should come in LFAR. If there is an item which requires a provisioning, or it's a critical advance where the branch has not classified it, and the auditor wants to classify it, then an MOC should be passed. And if it is not passed, then there should be a qualification which should form part of the statutory audit report. Some details about it we can highlight in the LFAR, but we cannot say that I've mentioned it in the LFAR, so that is the reason why I have not brought it up, or that's the reason why I have not qualified in the statutory audit report of the branch is not acceptable. So these are two different, distinct things. Okay. Now LFAR is a report for limited use of management and the regulator. Let's be clear on that. It does not go out into the general public or to the shareholders. Now, any adverse comment in LFAR may not necessarily lead to a qualification, but if it does, then ensure that it is reported in the main report also. I just mentioned that. Now, what happens with these LFARs? This is the other question, which is why I thought I must talk about IFC also here, because these are, when you look at it from the central auditor's perspective, there is a review of the IFC and the IFC network being done by the central auditor. But there is another completely different task, which is the consolidation of the branch LFARs. And this consolidated LFAR has to be submitted to RBI within a certain time frame. And many a time, RBI, once they start their inspection, they start with this as the base document. So please don't think, I've heard auditors tell me, no point writing in the LFAR. Nobody is going to look at it. Who's seeing the LFAR anyway? People are concerned only about the branch audit report, statutory audit report of the branch, and the MOC consolidation. Nobody is even looking at LFAR. Do central auditors even see the LFAR? No, these are questions which we hear either at seminars or from fellow professionals. But let me assure you that that's not the way it is. Central auditors, and if there are multiple central auditors in a bank, let's say if SBI has 13 or 14 central auditors, one central auditor is assigned for consolidation of LFAR. Various statutory auditors are handled responsibility of various. One will handle consolidation of treasury, one will handle consolidation of the branch consolidation, one will handle advance consolidation, large advances, medium corporate will be handled by somebody else. So this is how the duties are assigned to various central auditors when there are multiple auditors, and one specific auditor is assigned this job of consolidation of LFAR, getting all the inputs and presenting the consolidated report to the bank. So please don't assume that there's no point filling. It's just a control questionnaire, and it's not, nobody takes it seriously and all. That's just not right. LFAR is taken very, very seriously at the corporate level. Now this is again important, because a lot of time what happens is that the branch auditor writes some comment, and later when it goes to the head office, it becomes a very serious observation. And when they take it up, the branch manager says, I have not seen it. Nobody has shown me the LFAR. That cannot happen. So please ensure that you discuss the contents of the LFAR with the branch auditor and get them also to sign off on it, saying that we are in agreement with the observations, or if they are in disagreement, agree to disagree, but have that document. Now, LFAR, it's a very detailed questionnaire, no doubt, but nevertheless, it is not exhaustive. So, there is anything more that we need to add. So, this is something like, especially related to some of the auditors we see, right? Very proactive, and a lot of good comments are written about the CBS system or core banking or other IT-related aspects, etc. And some other specific areas which are there in certain branches. Some auditors take that extra effort, and you must understand that these are also appreciated. Finally, the branch is seeing your report, the head office is seeing your report, the central auditor is seeing your report. So as a branch auditor, you must understand that a lot of people are going through this LFAR which you are preparing, and they are judging you. It's important that if you have done a good job and you have applied your mind and done well, and you have observations, kindly document it so that you look at it, you're also feeling very proud. As a central auditor, when he's consolidating it, he will pick up some report and say, look at this. This is the report which has come from the auditor in Ranchi. This is the observation which has come from the auditor in Kolkata. It's an excellent observation, and very, very good. So sometimes we form impressions about fellow professionals also based on, because we don't see one another, but we are having a document in hand and reading it. It's some little, somebody who's done a good job. So it's important, right? I'm sure all of you agree with me on that. So avoid making vague or general comments. Give specific instances of deficiencies wherever possible, and try and avoid yes and no, not applicable kind of comments, and draft the responses very well. The questions are very elaborate. When the questions are very, very elaborate, why should we just write yes, no, NA? Let's also write, proper answers, so that the questions are 4-5 lines. Let us at least write 3-4 lines as a response to it, so that we give respect to the question, and finalize the audit and the statutory audit report and the LFAR all simultaneously. Don't finish the audit off and later on send a team to do the LFAR and all that. It will not happen in a proper manner if it's not done simultaneously. From the word go, from the planning stage, let LFAR also be a part of our important audit. It's an audit report. It's a long form audit report. Audit report is the most important document as far as auditor is concerned. Just because there is another statutory audit report does not mean that we need to dilute the importance of the LFAR. I'm going on saying these same things simply because we are seeing that the LFAR is not being taken seriously by 9 out of 10 reports that come. We are seeing that when it comes at the head office level, when it comes at the corporate level, 90% of the LFARs are completely, vague comments are written, or at least 80 to 90% are very, very patchy reports which come in, and the 10 or 20% where there are comments are done very well also. Let me appreciate that also. Some of them, it's very clear. So when you sit there and look at it, it's very clear, because the ones who have applied their mind and done a good job, you can just read it, and 5 minutes time, any of us are able to know whether the auditor has applied their mind on the LFAR or not. So please, let us, as a community, let us all ensure that we do that, so that the branches, finally, we must understand we are living in a regime where they are trying to ease out the branch audit mechanism. Banks no longer want branch audits. RBI is also asking, why do you need all the branches to be audited? It's only because ICAI is standing together as a force and saying no, branch audit has to be there. Branch audit is important. So ICAI is doing everything possible to protect the interest of the members. So isn't it important that we also give teeth to ICAI to fight our case? We should also so ensure. So moment we start doing a good job, then the bank and the branches, everybody will start seeing benefit in it. So when they see that, okay, fine, the control weaknesses, systemic issues, deficiencies are all being pointed out. A lot of value addition suggestions are coming in. So no, we must have a branch audit. See, the perspective itself will change if they start seeing value in what we are doing. And finally, what are the precautions? Have proper documentation. I spoke about documentation earlier. Let me connect back to this. Ensure that there are proper documentation and get representations, because once your observations are escalated, many a time the branch manager will just turn his argument around, saying that no sir, they didn't discuss with us, no, they've not taken our opinion, they've not taken our representation, etc. So don't give a chance for that. Ensure that you build up all your files accordingly, and ensure that the LFAR or the branch head also agrees with the comments in your LFAR and initials on it. Now let me move on to some of the specific aspects. We are at 10 o'clock. I'm very much conscious of time because I know there is another session that's coming up. So specific areas which are there. Now what are the main areas which are there in the LFAR? There's assets, there's liabilities as part of the balance sheet, then as part of the profit and loss account, income, expenditure, and some control issues. These are the broad heads which are part of the long form audit report. So the first, and let's start with the most important as far as the bank is concerned, would be the assets related to cash, balance with RBI and other banks, money at call and short notice, investments, advances, fixed assets, and other assets. Now typically if you look at a bank's balance sheet, of course it will vary from bank to bank, but what you will see is that around roughly 60 to 70% of the total assets will be advances. Around 20-25% will be investments, and all others put together would be about 10-15%. So that's roughly the mix of what a balance sheet of overall at a bank perspective looks like. From a branch level, it will be slightly different, because usually investments may not be part of the branch and all that. So the advances will certainly be probably 80 to 90% of the total branch balance sheet. But from a total bank as a whole, if you look at it, in any case, 60 to 70% will be advances. So I have my partner Govind who says he's in fact helped me with the slides also. So he always says advance is the rock star of the balance sheet. So I would also agree with him on that. So the first point, let me move on to is cash. What are the aspects that we need to look at when you look at cash? There are questions. I'm not getting into the specific questions which are in this thing, but the areas we need to look at is the limit, the insurance aspect, physical verification aspect, and periodic inspection. Now, what do you do when you go into a very large branch and physical verification? That could be you'll see a whole area being kept, and the cash balance could be huge. So how do you go about it? You need to nevertheless verify it. So have your own audit methodology in place when you're going to verify. Tell them clearly, because banking hours, there will be a lot of restrictions. We may not be able to do it like how we would in a regular corporate that we do. So understand the psyche of the branch and tell them when you're going to verify and how you will verify. Obviously, machines will be needed for physical verification. You can't do hand count and all that. So this is how cash is to be verified. And what do we report on when it comes to cash? The system of monitoring of cash at branches and management of cash through the currency chest operation, the insurance cover aspect, including in transit. In cash, that is very, very dangerous. We need to ensure that cash in transit insurance is taken properly. And what is the system in vogue also? Even as I speak about all these areas, you must please keep in mind that this is an internal control review. So we may have to slightly wear a different hat. This is a combination of what a statutory auditor and an internal auditor would do. So probably the mindset with which we should look at all these aspects of LFAR should be a combination mindset, not just that of a statutory auditor. So all that I'm talking about would only be indicative observations. But keep your eyes and ears open like you would for any internal audit assignment also. If there is anything else that comes, because it's a very, very individual case. There's no one size that fits all when it comes to bank audit. Every branch, every bank has its own systems and processes. So you may have the experience having seen something somewhere. If you have an observation which can help, I would definitely say that please write your recommendations also. And what is the system and procedure for physical custody of cash? Moving on, the second head is balance with RBI, other banks, money at call, short notice, etc. You may not probably see this in all branches, but in some of the branches it could be there. And what are the aspects we need to look at? Confirmation of balance, reconciliation, and compliance with bank guidelines. These are the three aspects we need to look at for this item. The questionnaire is very detailed. Again, I'm just not going to read the questions because I'm sure you can all, it's our questionnaire is very simple to comprehend. I'm just giving you a bird's eye view of the important aspects here. And what do we need to report on? Whether balance confirmation certificates have been obtained. Now, this is very, very important because when you audit a regular corporate, what do we take? We take balance confirmation from the bank and we say it should be obtained directly, etc. Is what ICAI tells us, and that is what we have to follow. We will not accept it if the company gives us a confirmation. It has to be direct confirmation. Similarly, when you audit a bank also, just because this is a bank does not mean that we can accept their internal certification. We have to get balance confirmation, external confirmation, not just for these, but any other accounts where we need to get confirmation. We may talk about it later. WASPRO accounts, NOSPRO accounts, etc. Balance with other banks, foreign banks. Get the confirmation, direct confirmation from the respective banks. Unadjusted entries. I'll again talk about this when we come into certain other heads also, but old unadjusted entries is a major problem in branches. Many a time, branch managers, probably quite often, it gets missed. If at all it is found, explanation they give is that this has been there for many years and the head office has told us to retain it and all that. They may just be saying it, not that they understand what it is and all that, but this is, we hear explanations like this, but please don't accept these because there could be some dangerous items lying there which could be part of some larger frauds which happened earlier, or could be a leading case for something which has not been found out earlier, but this could be the starting point for unearthing something which is already there. So please don't leave old unadjusted entries casually. If they are not able to adjust it or anything, at least report it, highlight it appropriately, bring it to the attention of the head office and central auditor that there are items like this. What is the system related to operations in the interbank called money market, etc. Again, the system angle. I just picked up one item here to say, because in all these points, please understand that reporting on the systems, processes, procedures, etc. is what is expected of us. And these are areas where we can add some value also. So do some more extra reading, even if you're doing this only for the very first time. In fact, many a time it's an advantage that you're doing it for the first time. People who've been doing it over and over again, they probably get a little more complacent sometimes. First time auditors or people who are even who are experienced, if we are able to do it as if we are doing it for the first time, I'm sure our perspective would be different. We would go back to reading the guidance note again. We may not have read all these in the guidance note, we would have probably read it in probably 10 years ago, and we're just assuming that guidance note on all these things are not amended and all that. But it's only when we read it that we understand that recent developments have also been updated in the guidance note. So important that we read from the guidance note and also report on any systemic improvements that we can. Talk to other fellow peers. We are fortunate that we are in a profession where everybody is helping one another. And look at the team that is organizing these events. Such wonderful individuals and professionals who are taking so much of their time out, and we should also reciprocate that by helping the profession. And if there's something important that we see, please highlight it to the officials at the SIRC or to the respective branches. And many of these things can get escalated and could find a place when the guidance note is revised the next time. Investments, I'm not going to be talking about it because investments is usually for all the banks. There is a separate treasury that is happening. So there is a treasury audit that gets done, and all these. It's again a 2-hour topic if we are to get into AFS and HTM and how to valuation of investments and all that. So I'm not getting into investments here, but just keep in mind that probably in some cooperative banks or so, probably investments may be handled at the branch level. But if that be the case, the guidance note clearly tells us how the evaluation should be done, and regarding the switching between investments, etc., how it can be done, when it can be done, etc. So read up and understand on that, and if necessary, we can probably plan another session some other time on investments. Now we move on to the all-important area in the balance sheet, on the assets side, which is advances. I'm very much aware that there is a separate session on IRAC norms and advances. So I will not be touching the norms, the prudential norms, and the definitions that go into overdue and what is how an account is to be classified as NPA and what are the norms, etc. I will not be touching during this session because we have a very, very eminent speaker who will be speaking. But this is my pet area. In fact, last 4 or 5 years, it is advances that I have been given the opportunity to speak at, and every year it is this topic that we take. So this time, during the course of discussion with chairman, I'm really glad that that I have been given an opportunity to speak on something that's a little different, and but I'll nevertheless be touching on some aspects of advances also, because it is the most important area in the LFAR. So if I don't speak about LFAR, about advances and some of the practical issues that need to be covered in advances, then I will not be doing justice to my presentation on LFAR. So what is it? What are the types of advances? Term loans. This is just indicative. Again, bank to bank, there could be different exposures, different types of advances, but typically it's cash credit, working capital loans, term loans, agriculture loan, bill discounted, and education loans, and many other instruments which are in the nature of unfunded exposures. And what is the process? Again, let me reiterate, this is from the perspective of LFAR. LFAR has several questions on advances under 4 heads. First is credit appraisal, second is sanction and disbursement, third is documentation, fourth is monitoring. Under these 4 heads, there are several questions which are there in the LFAR, and we will just try and understand what are the questions which are in the LFAR and what is it that is expected from an auditor. Again, I'm not going to get into the questions as such, but what is it that as an auditor we need to verify so that we are able to answer those questions in the best possible manner. So the first is credit appraisal. What are the things we need to look at from credit appraisal perspective? Integrity and competence of the management, financial track record, credit rating and CIBIL report, economic viability of projects, and audit qualifications. Now, this credit appraisal is not done properly, then the entire health of the account thereafter, there could be issues. So this is most critical, which is why it is the very first step. So we need to get the circulars, we need to understand the sanction terms, we need to understand the policies of the bank when it comes to the appraisal stage, etc. And whether there are any comments which are there in the credit appraisal document. We should not just look at the ledger account for NPA norms. Again, I'm not getting into the norms here in this session. Or we should not just think that, okay, fine, according to the norms, there is no overdue and there is no reason why it should be classified. Fine, norms side is one. But there's something that goes beyond that, right? That is to understand the health of the account. To understand the health of the account, understanding the appraisal mechanism is very, very important. Otherwise, there could be quick mortality. Quick mortality means an account advance is given and in 6 months, 9 months time, it becomes an NPA. How does that become? It's because of weakness in credit appraisal that quick mortality usually happens. So this is an indicator. Again, what we are doing here is an internal control system review is what we are doing here as part of LFAR. So keep that in mind. So apply our mind clearly on the appraisal methods, appraisal methodology followed by the branch. Very, very important. Next is regarding the sanction and the disbursement. Now, are the limits being set? Is that the approved limit? We need to check all these, whether it is within there may be a total limit, there could be sub-limits for different types of loans. Has any of the sub-limits been, have they given more than that? They'll say it is still within the total. May not be, cash credit limit is 10 crore, term loan is 20 crore. So total is 30. Does not mean that you can give 25 crores for cash credit. Cash credit is capped at 10 means you can give only 10. So ensure that we've looked at the sanction limit, ensure that compliant. There will be many pre-disbursement conditions that are mentioned in the sanction letter. Many a time for large cases, it may even be a board approved document which says 4, 5, 6 conditions to be complied. But what if the branch manager has disbursed it, or the corporate office has disbursed it before these are complied? This is a very severe and serious violation. You must understand that non-compliance with the pre-disbursement conditions is something viewed very, very seriously. Similarly, borrowing powers, whether the borrowing powers, delegation of authority, etc. So it's clearly laid down whether that has been breached as we look at. Documentation. Let me keep on repeating from the very first, from the commencement of my presentation, I have been talking about it. Similarly, from a perspective of advance also, this is not documentation for our file purpose, but the documentation which is to be maintained by the bank that I'm talking about. Do they have all these important documents? See, while we say that we should maintain our documentation to ensure that peer review and QRB, etc., are that we sail through all the reviews. Similarly, branches also must have a good documentation system so that they sail through our audit review process also. And for that, these are just again very, very indicative. We cannot say that once these 12 items are there, the entire documentation is in order. Definitely, one can't say that. But these are some very critical. If any of these are not there, then these need to be highlighted. These are all very, very important. Valuation reports, the legal opinions that are taken, charge creation, NOCs, insurance, title deed, encumbrance certificate, loan agreements or hypothecation execution agreements, and demand DPNs and guarantee agreement, lien, physical verification of documents. So, I mean, this is all very, very important, and these papers should be there. Do not accept some statements, oral statements saying that this is there, this is taken, this is in the head office, this is available there. Please don't accept it. If it's in the head office, please ask for a copy. If they're not giving it to you, please report it. Put it in your LFAR, and if necessary, even include it along with your qualification saying that the following documents were not made available, and make your opinion subject to that. Nothing wrong. Finally, we have to protect ourselves. Times are so bad that as professionals, if we don't protect ourselves, then who will? So let us ensure that our certificate is most important for us, and especially in these troubled times, we could be hearing a lot of stories related to advances which the branches have to say. There will be so many problems which we are going to face. Really going to be challenging for us this year, and by no means can we dilute our procedures, because in another 6 months, 9 months time, RBI will be coming and looking at all these things. We don't want a situation where RBI is going to point fingers at us and say that the auditors have been negligent and all that. We cannot afford it. So we are very, very independent here, and if we don't get anything, if we are not given proper evidence and proper documentation, etc., please report it. And finally, the monitoring side of it also. How is the branch monitoring the correspondence file, the minutes, whether there are unauthorized withdrawals, what is the classification, whether it is being done properly, whether the system classification is happening properly itself in the first place. Does the branch manager have the powers to go back and edit an account which has become NPA in January? Can the branch manager go in February and just edit it and just bring it out? Or is there a situation where the system does not automatically capture NPA at all? Is it manually that NPA is being captured? So these are all very dangerous. Similarly with SMA also. Our SMA is handled are being captured by the system. Do a minimum system review and understand how the system classification of NPA and SMA is happening. Stock audits, whether it is done in adequate frequency and periodicity, whether copies are available, documents related to renewal, recovery measures, and unfunded limit, again, a very, very, very dangerous thing. We'll talk about it when we speak on contingent liabilities. I will bring that up again. LCs, bank guarantees, and the LOUs, which was existing earlier, etc., are very dangerous. Restructuring, again, I'll just, a few slides I have about I'll spend 10 minutes on some of the practical issues also related to advances, so that you understand what are the kind of observations or what are the kind of problems which we may see, which will result in adverse comments in the LFAR. And inspection, of course, wherever necessary. We need to also not just ensure that the branch is inspected, but if there is any doubt regarding the project or the viability, etc., wherever possible, it's a good audit procedure to at least go and inspect if we feel that there is, if we are not convinced about some of the facts which have been brought before us. Okay, next 10-15 minutes, I'll try and run through what are some of the practical issues related to advances from these, again, clearly from an LFAR perspective, related to just some of the items. There are so many issues, so many heads. We can talk about sectoral risks, we can talk about education loans, and so many other areas where there could be problems. But typically, under these 4 or 5 heads, if possible, let us try and have some comments in the LFAR, which is why I just brought out a few. Quality of appraisal, because this is a controlled review exercise that we are doing. So we spoke about the importance of credit. So what are the aspects when we look at it? The identification, quick mortality, restructuring, whether CIBIL and other credit rating reports are being effectively used. CIBIL or the CRILIC report, which is a very good document where CRILIC report tells us for one particular account whether any other bank has classified it, or rather what is the classification in all other banks for one particular account. So there could be an account which is performing in our bank, but it may be NPA somewhere else. So that is a red flag for us. I'm not saying that because it is an NPA somewhere else we should classify it, is not what I'm saying, but it is a red flag for us that if it is an NPA somewhere else, then it is a problem account. CRILIC report is available for all of us. So you can look at it, all major accounts which you're looking at from a branch perspective, please get hold of it and see how the other banks have classified it. Similarly, CIBIL, wherein the history of the account is available, and if there are any defaults would be there in that. And whether any unhealthy accounts, there has been enhancement of facilities, sectoral risk, etc. And just couple of, in each of these 4 or 5 points, just couple of instances which we've seen, I thought I should share, because otherwise this whole discussion will be very, very theoretical. So just some practical things which we have seen also. Obviously, I will not be talking about the name of the bank or the name of the customer or of the party, etc. But this was one case that we saw related to appraisal, where at the point when the loan was given, the real estate sector was under considerable stress. This company itself, this was a company in very, very reasonably well known at that point, and it is very clear that the company was going through considerable stress. The proposal itself had viability issues, and the credit appraisal note also said that there were problems, but nevertheless the loan was sanctioned. Now, what do you say about that? Technically, it's not an NPA or anything. It's not become an NPA at that point in time. But what would you do? Or what should I do in a situation like this? Should we not report? Branch will go all out to say that, no, sir, they have collaterals, they are huge, he has a big house in the vicinity, he has a very large car, and is a very well-connected person. They will tell us all stories. Should we be accepting it? Obviously not. So this is an area we need to report. Similarly, another situation where the CIBIL report had major defaults, etc. But when we looked at it, we saw that the branch, during the disbursement stage, has not looked at the CIBIL report at all. Anybody who looks at the CIBIL could have seen that there was a problem. That has not been done, and there are various other discrepancies in documentation. KYC norms were not proper. The identity. See, once there is a trigger, then we will get into it, right? And this is a case where it finally turned out to be a big fraud. In fact, there was a lot of mismatches. So it started off with one. Thereafter, we saw that there was, the signature mismatches were there, and there were. This was almost like a securitization kind of thing, where there are a lot of parties involved. Smaller, elements were there as part of this particular advance. And when we look through each particular sub-borrower, so to say, we could see that the ID card does not match. Somebody who's an 80-year-old and the ID card's age is shown as 30. Some 40-year-old person's ID card has a very old 75 or 80-year-old person there. And so these kind of, picture mismatch and signature mismatch. And then more we went into it, we found that there were several things. not just that we classified this as an NPA, but it was also taken straight into a losses sector. So that was how bad that account was. Second point on health of the account is that, again, the field input information, operation level, drawing power, stress test, and greening. Some more examples from the health angle I will talk about. Year-end regularization is something that we see quite often. This year, in fact, it will be interesting for us to see what is going to happen when we do these audits, because the year-end there was a lockdown. So probably the regularization could not have been done, or I don't know if sitting somewhere from remote locations whether the branches could have done that. But it will be very interesting for us to see how the year-end, particularly this SMA1, SMA2 accounts and all that, how those accounts have been regularized in the year-end will be very interesting to see. But this was a case where, there, just one-off cases coming in. There'll be one random credit which comes in, which gets, regularized, or which gets withdrawn immediately. So on 30th March or 31st March, there will be one credit. You look at it on 5th or 4th or 5th of April, when you're checking it, it has been reversed. So then you know that this is not a genuine regularization. So these are things, wherever possible, we must classify as NPA. But even if we're not able to classify, some cases, not all cases would be an NPA as such, but ensure that these are all accounts which are highly stressed and where there are problems in this, and you need to highlight these as issues from an LFAR angle. Also, these are monitoring issues from the branch perspective. Again, a similar case. I'm not getting into it. I think we are running slightly short on time, so I'll hurry a little better. Now, another instance where we saw that the debtors, 19 crore was the debtors, and more than 6 months was 10 crores. Turnover is only 25 crores. Thereafter, that was the warning signal. So point is that there should be some warning signal should be there. Once we see the warning signal, then we need to pursue it by applying other audit procedures and all that. And we looked into it, and these days, thanks to Google, we can get some degree of understanding about the history of these. Not that it is entirely reliable, but at least if there are some problems, we are able to. A lot of cases we are seeing. So every major account that we verify, major advance, we make it a point to Google up about that company also and see what is the promoter background, whether there are any problems, any criminal antecedents are there, whether there is a dispute between promoters, etc. And so many times we have seen that things which are not available on the file, and everything looks fine, well serviced, but much larger issues are there when we read up, and we have to bring it out. I'm not saying that we can classify it, but bring it out simply because these are all accounts which 3 or 6 months later could turn into NPA, simply because the issues have started during our period, but the resultant outcome may be a few months from then. But we have seen it, please report it. Third is evergreening or greening of accounts. So many different ways in which this greening is happening. Let's reduce substantially thanks to system identification of NPA and all that, if assuming the system identification is happening in a proper manner everywhere. But nevertheless, we still see many cases of check purchase, subsequent regularization, isolated cash transactions, circuitous transactions, group companies from one to another. Some facilities given to one company, when it just comes around and comes back to regularize another. Ad hoc facilities given at the year end without any logic, just to regularize it. Some ad hoc will be given 1 week before the end of the year or quarter. That with that money, with the ad hoc given, interest gets serviced and all that. These are not acceptable. Let's be very clear. As professionals, we should not accept all this, and we should be very aggressive about it when we convey that also, saying that these are bad practices, and there is a trust issue that we have when we see things like this happening. Then we start mistrusting everything that has happened in the branch. Some cases, again, 2-3 quick cases I'll run through where we've seen greening of bad accounts. Checks purchased in a sister concern, with the money that has come to the sister concern, it gets routed into the main party account and gets regularized. So for this, we need to analyze the source of credit. How did we find out? Go through source of credit. You should be all sources, even RTGS, NEFT and all that. Let us not blindly accept that. If possible, try and see, even if it is an RTGS, see whether on a same day or a previous day to some sister concern or something which is within the bank. Some other bank has given some facility and all that, it could be beyond our purview. But within our bank, in some other branch or something, if another facility has been given, then we need to take that little extra effort to see whether whether some circuitous transaction is done to regularize. Again, another instance of check purchase for regularization. Isolated cash transaction. Again, this has to be looked at. If it is just one isolated cash transaction, which is servicing the interest on the last day or just before that, we need to look at it, because this is a case where we saw that the term loan has been serviced through cash. And where did this cash come from? By ODCC, there was a limit. You overdraw that ODCC limit, give them beyond sanction, beyond the powers of the branch manager, and give an amount there. And with that cash, it gets regularized into the term loan. These are all to be reported instances. I'm just running through some instances so that while you're doing the audit, some of these hopefully will come into your mind. Loans to associate concerns to regularize bad accounts which are routed through multiple branches. I just spoke about that earlier. Given in one branch and it just keeps coming back. Anyway, my slides are also shared, so you can possibly go through some of these. And ad hoc facilities. This used to be a very rampant practice. Of late, we are seeing that this has come down. But nevertheless, I'm sure that in many branches and in many banks where the governance mechanism is not proper, I'm still sure that these things will continue to happen. So ensure if there are any ad hoc credit limits, and the manager will try and explain in great detail to you as to why that person deserves the ad hoc. But please don't be fooled by that, and do not accept ad hoc facilities. You have to put your foot down and say that this is an additional facility given to ensure that an account does not become NPA, and hence that is not acceptable. Drawing power, very, very important, and in fact, one of the most important indicators of whether an account is to be classified. Many a time we see that we are identifying NPAs as a result of drawing power. How is drawing power computed? Again, we need to go back to the sanction terms. Could vary from case to case. It's not that every bank has a standard policy. Case to case basis, the computation of drawing power may go up or go down depending on what are the elements in the sanction method. So understand for each file that we review how the DP is to be computed, and see whether in some cases stocks above 6 months, or in some cases it could be stocks above 3 months are to be excluded, debtors above 6 months are to be excluded, etc. would be there in the sanction term. Well, but the way the branch has shown you the statement, all those things would not have been reduced. And once we rework it, then drawing power goes down and the account remains overdrawn. This is happening very, very rampantly. For that, what do we need to do? These are some of the aspects which we need to look at. What is the impact of unpaid stock, the aging of stock and debtors, how often is the stock audit being done, how effectively is the concurrent audit mechanism, etc., whether they have reported. Concurrent audit is happening regularly, and probably many of these cases would have been reported by the concurrent auditor, because they are looking at the stock and debtor statement on a monthly or bi-monthly basis. Just a couple of cases quickly to tell you. A simple case. This is a case where the the drawing total case of a consortium advance, so the total is 22 crore. The bank's share is 45%, so it's actually only 9.9. Now the outstanding at all points was above 11, about between 11 and 11.5 was outstanding. Now what the branch has done is that instead of 45, they took 54. You see that? So if you take 54, then it comes to 11.88 and it is within the limit. But if they are eligible, bank is eligible only for 45. Moment we found this out and spoke to the manager, he said, "Oh, so sorry, sir, it's only a clerical mistake. 45 became 54 and all that. Not that we believe it. But the moment it becomes 45, then it becomes an NPA. Then he immediately comes after us saying, no, sir, the drawing power is actually not 22. It is much more. We'll give you a revised statement and all that." No, we cannot accept all these things. It's a consortium advance. Consortium leader has sent this to you, and now you see that I will go back to the consortium leader, get a revised BP statement. And all that. We cannot accept these things. These are all to be reported. Also, we must review the difference between, so you cannot blindly accept a stock and debtors or a current account statement which they give us. Now, this is in the case, one particular case we saw. These are all real numbers and examples which I'm sharing. So, as per stock statement, there are one set of figures, and as per balance sheet, figures are much different. Particularly, if you look at the last line item of sundry creditors, as per the statement furnished by the company to the bank, to the branch, the sundry creditors is only less than 30 crore. As per the audited balance sheet, it is 97 crore. Same day, they are not able to explain. So then, how do we accept this? Obviously, we cannot accept it. This is when we looked at a year prior to. Right now, when we go in April, we may not be able to get the 31.3 of this year. We compared with the our last audited balance sheet with the stock statement then given, and then we saw this. Thereafter, you apply the same logic in the same. This year also, when a stock statement is given, they will show in the current account statement. They will say that sundry creditors is only 35 crore or 40 crore. We cannot accept it because we've seen sundry creditors 97 crore in last balance sheet and a gap of around 70 odd crores between the two last time. We'll say the same gap remains even now. So not acceptable. Just throwing some light. Agricultural advances, obviously, huge sectoral risk is there, and it needs to be the whole norms are very different for agricultural advances, and I'm sure the next speaker will talk about that. I'm not getting into that again. This is an instance where there was diversion of funds, accounts not coming in, and agricultural advance. What we also see is that advances, which are not in the nature of agriculture, are we've seen sometimes purchase of land is taken, purchase of tractor. Few years ago, we had to do the audit wherein there is a waiver scheme of agricultural advance. When we do a thorough waiver audit in one of the banks, we're seeing all kinds of things are maybe small value, but nevertheless, equipments, agricultural, assets are being procured in the name of agricultural. These are specific purposes are there for the agricultural loan, and it needs to be complied with. An item for which a term loan is necessary cannot be shown as an agricultural loan. Again, packing credit loan, pre-shipment, post-shipment, another very, very dangerous area. We need to very clearly look at these aspects. I'm not getting into it. I'm sure that in the subsequent session also there will be a great deal of discussion on the nature, but we must clearly understand what is the rollover, extension, etc., whether it is justified, and if not, whether an extent or whether additional facilities are given only to regularize some other CC or OD, etc. Is these are things we need to look at from PCL angle. Restructuring, I will for now leave restructuring out. Certainly, I'm sure it will get covered in the next session because for paucity of time. So those are, I spoke in great detail about advances from an LFAR angle, what needs to be reported, because that is where the largest chunk of our observations are going to come. Hence, I have spent a little longer there. Other areas I will quickly run through in the next 8-10 minutes. Fixed assets, from a branch perspective, may not be too much, but these are the aspects we need to look at. Register versus physical verification, vouching, the depreciation, bank policy, etc. We need to understand and ensure that assets are depreciated as per the bank policy. Suspense accounts are very, very important, because one thing is that when it goes into suspense account itself means that in our common parlance we know some unidentified item is what goes into suspense. So we need to look at all the items. If at all a branch trial balance has an item called suspense account, understand what these are, understand the reconciliation of the entries, are there any old entries, and also look at the subsequent few days and see whether those entries have been knocked off, etc. We must have a clear understanding on what these accounts are, and in many a time we may not be able to understand. Let's be practical. If so, please report that suspense accounts of rupees so and so is lying in the books of account for X amount of years. We are unable to verify what these accounts are. Simple. And decision can be taken at the head office whether it needs to be knocked off. Stationery and other critical inventory, gold coins. We spoke about cash. Similarly, gold coin inventory could be there in some of the branches. And check, demand draft, travelers checks, etc. What is the policy for it? What is the bank policy? Again, from a systemic angle, please report any other suggestions which we may have also. So the biggest chunk is done. I can quickly run through the liabilities side in the next few. Liabilities and profit and loss are very quickly run through, because here again, more than 90% in all the branches will be just that one line item called deposits. So deposits will be 90%, and other items will be probably 10 to 12% could be all other items put together. So I'll just focus on deposits, mainly three types of deposits we all know: demand, savings, term. And what are the possible risk areas? Inoperative deposits, window dressing just to show a higher deposit. Are they showing some book entries? Are there matured or overdue deposits? What is being done with that? And whether money laundering, anti-money laundering, PMLA, etc. are there, KYC norms are being complied. From a control angle, these are the most important aspects. Certainly from an interest computation angle, I'll speak about it when I get to the P&L side. Borrowings from banks this item may not really be there in most of the branches, so I'll skip that. Other liabilities, bills payable will be there. Again, we spoke about the control over the inventory, etc., of demand draft, travelers checks, etc. So these are basically bills payable or amounts payable by bank for payment received from another customer. So see the accounting flow of these bills payable and get a proper closing, ensure that the proper breakup, item wise, party wise, and all the breakups are there, etc., needs to be identified. And if there are old entries, it's an indicator for a fraud. Understand that. We spoke about it earlier. Provisions, I'm not getting into because there is a separate session. Standard asset provision and PA provision, I'm sure will be covered in that, and contingency provision also. Tax provisions, we all know that typically this will be done at the head office level. Branch level, we must ensure the GST compliance, etc. Again, that is also going to be covered in a separate session. Very important aspect here in contingent liabilities is the first one, because this is an off-balance sheet item. You must understand. This is an off-balance sheet item. Regular advances are given in terms of disbursement of funds, etc. But unfunded exposure is where the bank has a huge risk, because as such there is no, if you look at it, there is no disbursement of any amount, but there is a risk in terms of some instrument which the for which the bank will be held liable in case there is going to be a dishonor of that instrument. So LCs, bank guarantees, forwards, etc. I'm sure in the session on advances there will be a detailed discussion on unfunded exposures, etc. But again, coming back to the Nirav Modi example, I think it's a big learning. That whole instrument of letter of undertaking has now been withdrawn, but still there are several banks which have all kinds of instruments, and we must understand what are the unfunded exposure instruments which are there, what are the forward obligations, etc. And very, very closely look at it, whether there are expired bank guarantees, whether there are devolved LCs, etc. are very, very key when you look at it from a contingent liability. Profit and loss account, there's nothing much to say. I think interest income is, in all branches, will be about 90% of the total interest. We need to, when we talked about advances, we need to ensure that the interest has been accounted in line with the terms. Interest expense, probably 70% of the entire of the total expense will be interest. Maybe 10-15% will be salary, and all others will be another 10-15%. So interest expense also, again, on deposits, we need to see whether the rates are applied correctly. Thorough ratio analysis has to be done, all the percentages, net interest margins, spread, etc. And we must also review the other items of income and expenditure. I don't think I need to get into this because we all know how to verify interest income. This is typically how we would in any organization. Only difference here is that income on NPA should be recognized only on receipt basis. So if at all you see that an interest on NPA has been recognized on accrual basis and they are not able to do anything in the system, and that has to be flagged, because NPA interest can be accounted only on receipt basis. Certain banks, we've seen that the system automatically captures it and then a manual entry is necessary to this. So please check whether income on NPA accounts is getting recognized on accrual basis. If so, it is not correct. It can be accounted only on receipt basis. Interest expense, I already talked to you. Do the analytical review, do some test check of computations, the TDS compliance, accruals, etc. need to be done, and the other issues, locker rent, guarantee commission, etc. are minor issues. And some of the other important aspects of LFAR is that before we close, ensure we have a representation letter, that the control weaknesses have been brought out in a very, very effective manner. Any proactive suggestions that we have should be reported. And provisioning not done should typically not form part of LFAR, but if necessary, you can write in the LFAR, but also bring it out as a qualification in the audit report and pass an MOC if it is not done. And if you feel that it has to be classified at head office, any classification, if the branch auditor feels it has to be done at the head office, please pass an MOC. Don't write vague comments and pass the buck to somebody who's sitting somewhere else. The central auditor does not have access to the branch manager or to the records here and all that. So why should you put the responsibility on the head of this central auditor? The branch auditor has to take the responsibility for provisioning that has to be done. So pass an MOC, and every MOC related to advanced classification that is passed at branch will be consolidated by central auditor. Reporting to RBI also. From all of these, if there is anything important that comes, or you feel a separate report has to be given to RBI on any of the other matters, please feel free to also report to apart from reporting to the bank, you can also report to auditor as the authority and the right to report to RBI separately, because our appointment is from RBI. What are our concerns for the branch? Dependence, over dependence on one or two key borrowers, disputes with borrowing entity, persisting audit comments, continuous exceedings, etc. Lack of transparency, prima facie unacceptable explanations, technical regularization, no proper stock audits and security valuation, etc. Large frauds in the recent past are a big problem for us, and we are also being seen as not being diligent enough many a times. So we have to be on our toes. Greening of healthy accounts, housing loans, bullet loans, etc. These things will get covered in subsequent sessions. And effective use of technology. My humble request to all my fellow professionals, we should imbibe. I think this lockdown has also helped us understand that technology we must imbibe, use tools effectively, use exception reports, and ensure that a lot of sessions are being organized by ICAI. Let us listen, learn, and share experiences and get ourselves equipped for it. Some of the suggestions to be given in the branch audit report, I'll skip that because I already spoke about it, and just have a one concluding slide on what is it that we need to finally do. Let us ensure that we have a good, proper, skilled, well-trained audit staff. It's important for us. They should be trained in the guidance note. They should be trained on the RBI circulars. We should be up to date. They should also be up to date. Redesign our audit processes such that it is all falls in line in a very systematic manner, and proper documentation is in place. Adopt processes. We may need to change our historic processes such that it is in tune with the new IT world and digital environment. Use audit tools, leverage technology, and leverage the use of all these to get very, very meaningful reports from the system. Makes our job much easier. And finally, and most importantly, we must maintain our independence. With many factors, there will be so many, from different sides, there will be pressure on us if we are going to identify an account and all that. Pressure will come from all sides. We must maintain our independence and use our skills and thinking to ensure that we do our job in the best possible and effective way. With this, I close. This is just a recap of all that I spoke about: audit planning, documentation, LFAR concern. Controls are basically suggestions. I didn't touch that because I already spoke about it in the relevant slides. So thank you very much. It's been a wonderful opportunity for me to be a part of this session, and we have another 10-12 minutes. So if there's any query that we need to take, I'll be happy to take that on. So back to you. Jalapati, back to you.
Jalapati, you need to unmute your mic, please. Yeah.
Thank you so much, sir. Thank you so much, Vivek, sir, for our detailed and excellent presentation. I hope all the members, all the viewers have enjoyed this session. Particularly for the first timers, it will be more useful to discharge their duties for the bank audit in an effective manner. I hope Vivek sir able to remember that last year we had that bank audit seminar at Taj Coromandel. So there were around 400 members have attended. But today, almost 1,000 viewers are watching this webinar. Thank you so much, sir. Thank you so much, each one of viewers, for watching this seminar and all the SIRC programs. Thank you. Of course, our chairman's close friends used to call DC instead of Dungar Jain. But now most of the members are calling DC, which is the dynamic chairman of SIRC. Thank you, chairman, for this wonderful opportunity. Yeah.
I will take the questions right away. You can kind of moderate.
Yes. Sir, Vivek, sir, the first question is, the intimating previous audit is enough? Need not wait to get NOC?
Ideally, we should, intimate and immediately follow up, make a personal call if necessary to the previous auditor and request for an email confirmation at least. I think that would be the best way of going about it. I'm sure all our professionals will oblige, no doubt.
Okay. Thank you, sir. Maybe. Next, sir, maybe the next question relating to LFAR. The LFAR reconciliation of control and subsidy records. Bank says that is happen automatic in the system. In case some heads of accounts reconciliation is not possible in system, how we will go about?
I think this is a very practical issue. We face that, and to the extent possible, if we are unable to physically do that, what I would suggest is if you have some IT person with you, try and do a test of controls and see whether the system is is robust and functioning properly. And yet, if it is not reconciled, please report. This can be taken up either at the head office. An exercise can be done, or as part of the IS audit, or in fact, it happens even with. I did not touch into interbranch reconciliations also. Even in IBR, sometimes in some of the banks, we see that such RICO issues are happening. And yes, I think you must certainly report on it if there are unreconciled items.
So next one, sir, if dormant account is made active during the year and huge deposits are made into it, then what is the responsibility of the auditor on reporting the part?
Again, dormant accounts, especially I think many of us who did the audit immediately post demonetization, we would have seen that large number of dormant accounts suddenly became active. So it is a trigger actually. So if that is happening, then given an extra. If you are not convinced about it, if you are convinced that it's a genuine deposit that has come in, then no problem. It's a judgment of the auditor. But if you are as an auditor not convinced about the deposit, then certainly you must.
Vivek, I think you can close the PPT so that you can see yourself on the screen. The questions also will flash on the screen.
Okay.
You're able to see three of us on the screen.
Yes,
you can adjust your face, laptop a little so that your face is visible on the top. Yeah, that's pretty better. Yeah. Jalapati,
yeah. Sir, next one, sir. The engagement letter to be responded to whom? Whether to appointing authorities or respective bank branches?
We have to get the detailed engagement letter response from the respective branches. Because in the appointment letter, it tells us, it gives the details of the branch manager and all the other people to whom communication is to be sent. So if it is from the branch or zone or region, typically it will not be at the head office. In some cases, we see that the communication of the auditor should be with the zone or with the circle, etc. In such cases, get it from the person to whom communication is to be done.
Thank you, sir. Thank you. So next one, for the opening balance verification, should we check the MOC of previous year or recorded in branch books?
Yes, we must ensure that MOC of the previous year have been accounted. Because sometimes what happens is that some of these things MOCs are consolidated, are in the nature of one entry that happens only at the central level. So it may not be possible that in all cases the MOCs would be passed in the branches. But we must ensure that it is either passed at the head office or at the branch, or if it has been dropped by for whatever reason, ensure that proper documentation is made available. The central auditors will not drop an MOC unless there is a reason for it. They would have been convinced, or probably it's a duplication of something else that is being off. Sometimes that happens where some of the MOCs are wrong. Some of the, but even in such cases, as far as possible, the central auditor would request the branch auditor to once again revise the MOC. But sometimes, for paucity of time, if that is not done, then it may have been passed at the head office level. So we must do a review of the MOCs of the earlier period to understand the treatment and be convinced.
Great. So next one. In a branch audit advances sanctioned by zonal office, shall we have to verify appraisal and the sanction part of advances, or we have to see compiling of sanction terms only?
So typically at the branch level, we may be able to look only at the compliance of the sanction term. There could usually be another auditor who may be looking at the audit of the consolidation level at the zone. So probably that may happen there. The systems, I mean, I'm not talking about a file by file review. The system of the appraisal would possibly be done by the person who's handling the consolidation of the zone, etc. But in respect to the specific file that you are looking at, irrespective of who has done the appraisal, please ensure that all the processes and procedures have been complied with regarding appraisal and sanction. Even if it is done at the corporate, even if it is by the board, because for large advances, it needs to go to the board. So in such a case, if you are looking at the file and you are not given the board approval or the board minutes for sanction of this particular advance that you're verifying, then you have the responsibility to call for it.
How to audit agriculture waived loans to farmers?
So this is not an easy one. Again, as I was telling you, we had this. I'm sure many of us in profession struggled when we were asked by the government to do the waiver audit of this. For it's not easy. Case by case, we will have to look at it, and typically there will be certain terms and conditions for the waiver. So whether these very small value loans, many a time, whether those waiver conditions have been met is all that we can really look at. And if the waiver condition is not met, because there could be different crops, seasonal waiver may not be across the board. So whether the crop, as per the waiver condition matches with the crop as per the advance, or whether there are again, in many a times there could be agricultural utensils, agricultural, various till and tractor and stuff like that, which have been given as part of the advances, etc. Those we have to remove from the waiver. It's not an easy exercise. It has to be done as a standalone activity. Probably test check at the branch level when you're doing that.
Thank you, sir. The next one is whether in and out register is required to be verified for valuable stationery and also gold jewelry packets where gold loan is advanced.
Yes, wherever gold loans are advanced, we need to. And again, from an LFAR angle, let me speak that the entire system in vogue has to be looked at. Now, from an advanced verification angle, it's different. Where we decide you may look at a sample, and those sample cases that you looked at from an advanced verification angle, thorough, you have to do an audit walkthrough of all the books and records, not just in and out register. In each bank or branch, there could be several other documents and registers which are maintained, and you'll have to look at various other aspects, loan to value and the genuineness, whether it is spurious gold. There are so many aspects from an advanced angle also which may need to be looked at, which I'll leave it to my learned speaker. But from a LFAR control perspective, ensure that you do a thorough walkthrough of the systems involved.
So next one, when the branch manager informs about insurance covering is at the head office level, is it better to mention the same on LFAR?
Yes, absolutely. You can write that. Many a time that could be the case. Many a time. So it's certainly any suggestion. I think let me once again repeat: any proactive suggestion that we have, or any limiting factor that we have, where we feel not just any of these. Let me again make a broad statement on that. If we feel that any aspect that we want to verify has not been given to us, you can bring it out in the LFAR. Any proactive steps or suggestions that you need to write, you can even say, yes, insurance is at the head office. But for a large advance of this nature, it would make sense to also make available a copy of that at the branch. You can give that as a suggestion also. Nothing wrong.
So next one, please explain the interbank call money market.
Okay, that's a long one. I think we are short on time, so I would probably request our advanced speaker to talk on that in case a discussion comes on that. So I'll pass that. But basically, we spoke about it again only from a LFAR angle. I spoke about the second aspect in the LFAR, which is of money at call and short notice, etc. How that money market works is it's not something that is that we should be discussing here.
Thank you, sir. So next one, sir, what if the amounts are laying in one party head in balance sheet, and when we ask regarding, they explain that those are held balance which is parked in that account during the migration of new software, and HO is aware of that. HO is aware of that.
Yeah, this is one problem that we see. Many places we see, which is why I think in multiple heads I spoke about unadjusted entries also. Quite often these unadjusted entries or old entries, unreconciled items have happened as a result of some head of account migrations, etc., where it has not been mapped properly. So please bring it out. Please bring out all such items, migration related. If there are any book entries which are lying either as unreconciled or unadjusted, I think those have to be highlighted.
So next one, what is the legal vetting report?
Okay. Again, I think this is also going to be under the purview of the next speaker. But very quickly said, this is for all the documents that are forming part of the sanction. We would ensure the bank has to ensure that the legal opinion is taken regarding the validity of the title, and the legal opinion which clearly says what we usually see, the legal opinion has some rider that the title is has the following issues 1, 2, 3, 4. What has the bank done to ensure that those those points which have been noted in the legal opinion have been complied with? I think that's what needs to be done from a practical perspective.
So next one, how to consider the questions pertains to assessment and appraisal when it has been done at central hubs.
I think it's similar to a question which I had taken earlier. I think what we can say is that, again, from an LFAR angle, our job is the systems and processes. So try and do a system walkthrough, a system review, a control risk review of this, and come up with your own observations. From when I look at it, from verification of advances, yes, you have to necessarily, whichever large advances you're looking at, you have to necessarily see that even if the appraisal is being done at the hub or zone or corporate office, ensure that copies of all that is made available to you. There cannot be a situation where it says it is all approved somewhere else, no copies available with us. Then how do you audit him? You have to be given all the documents necessary for you to independently audit at the branch level.
So next one, what type of advance should have AOD and when it should be collected? At the time of sanction or every 3 years or once the account becomes NPA? Kindly share your views.
What would this questionnaire be meaning by AOD?
AOD.
What do they have in mind? It's a short form for something which that person has in mind. Maybe some bank specific. I'm not able to understand the acronym.
Jargons are dangerous when used.
Yeah. But maybe with different banks, that is what we see also. Every bank has specific, unique jargons which only the people in that bank understand. So,
yeah. In one of the banks, the person was having a fight and he said, "Sir, let SOA come." He said, "I'll wait for SOA." He said, "No, sir, I meant statement of accounts."
Yeah.
So next one, kindly touch the validity of set of documents on renewal of set of documents validity. If okay.
Yeah, again, document renewal is also very important because it is in fact one of the terms for an account to be classified as NPA. Again, I'm sure there will be much greater discussion in the next topic, so I will not get into that. But yes, very, very important that any document which is not valid or not renewed, please bring it out in the LFAR also.
So next one. Given the time constraint, when are given 3 days to complete the branch audit, my concern is how far we can verify the key audit areas as mentioned this attachment.
Oh, how I wish I could give you a really good answer for that. I think the only thing you can do is please do not finish in 3 days. Take 6 days. Take 8 days. It's okay. I think get the time, speak to the branches. This year the pressure is going to be still higher because we've already lost a month. So instead of 3 days, they are going to ask you to do it in 2 days. But please do not succumb to that kind of pressure, because usually, the banks are requesting the branch auditors to complete in 4-5 days, but thereafter it takes the bank another at least 2-3 weeks before the audit is complete. So there will always be some buffer which is available. So in my opinion, it would be good if you can just talk to your central auditor also and fellow professional and say that I need some more time here. I'm seeing some issues here. So I need a little more time. I need to spend more time. Can I take another 2 or 3 days more? In all probability, the central auditor also will help you to give you that extra time at the branch.
So next one. In cash credit limits, stock statement were furnished for 6 months in a day. How to treat such actions for reporting?
I think we should. It's very clear. I think your question itself, the answer is there. I think we cannot accept things like that. Where I'm assuming that it has not been received before that, and that all of these statements of 6 months are coming in together. Then you need to say that whatever the frequency, if it is a case where the branch was supposed to collect it monthly, but it has come only in 6 months, then that is a discrepancy. If it was bi-monthly or quarterly, then you need to report on that and see that over and above that, you should also apply all the other points which I spoke about earlier, whether drawing power is there, whether stocks are unpaid stocks, overdue stocks, non-moving inventory, whether CC limits are breached vis-a-vis the DP. All those other things which I spoke about will be very, very important, especially because these are all triggers. When it just comes and for 6 months, I'm assuming that 6 statements have come together on one day from your question. That's what I assume. It's a trigger. So then you need to, should not be accepting that, should report.
So next one, interest on deposits where the interest is required on yearly basis or on maturity.
No, again, interest on deposit, you have to understand what is the instrument also. There is no one answer for this. There are various types of deposits these days. There's term, there is cash. Within that also there are different liquid instruments which the banks, somewhere in between a savings account and an FD and all the different banks these days have multiple instruments, and for which interest rates, if it is a term fixed deposit which you are withdrawing from, there is a reduction in interest. If it is a savings account which you keep for a longer period, there is an added interest. Banks are giving all kinds of schemes these days. So it is important that we understand what is the scheme and whether the interest rates are computed by the system in accordance with the scheme.
So next one, in the branch books, provisions on advances are going to be made or at HO? Only sir, please clarify.
Here again, we have seen practices being different. Some banks, the entire NPA provision is being done only at the corporate office or at the head office, and advances are retained in the books. But there are many other situations where the provisioning happens at the branch level also. So it will depend on the bank that you have.
So next one, what exactly we have to see with regards to KYC norms?
Again, it's a very, very broad question, and I think every bank will have typically their own policy as to what is required from a KYC perspective. So I think you need to see whether the bank's SOP regarding KYC is compliant. That itself will take care of it.
So next one, the fraud detection and the diversion of funds, whether included in the scope of work of statutory audit.
Oh, very much. I think fraud detection, it's come to a point where banks expect that every fraud has to be unearthed by us, and sometimes we are wondering, are we statutory auditors or forensic auditors? What are we expected to do? This is the question we sometimes have to ask ourselves in the profession. But yes, today we live in very dangerous times, and fraud detection is certainly something which the responsibility.
expectation is so high that they want auditors to find the frauds even before it is committed.
Absolutely.
So next one, how to identify that there has been a manual override on provisioning?
Yes, again, a very important question. And what we need to understand is we need to understand the system. For this, first we'll have to understand how the IT system in the branch or the bank works. Whether the system has a proper mechanism of automatically identifying an NPA. Some banks will identify an NPA exactly on, let's say, if it's a 90-day norm, not getting into the norms, it may identify on the 90th day itself. Probably it may become an NPA on March 20th. It will be identified as March 20th itself. In some other bank, even if it becomes on March 20th, system will identify only at quarter end. In some other bank, it will identify only at month end. That's how the system has been set in such a manner. Now you will have to see how it is done and whether the system is set at all. And there are some banks where the system will not capture at all. Cooperative banks, if you are to do, many a time you may see that the system will not capture. It will have to be manually identified and passed. So if a manual override is possible at the branch level, very dangerous. That's all I can say. Very dangerous. And particularly in a time like this, because we are now going into a regime where an item which is going by the new April 17th circular, what the position as on February 29th has to be maintained is what it says. So how is the system going to capture that is going to be very interesting for all of us to look at. I'm sure my next esteemed speaker may probably throw some more light on that also.
So next one, please clarify the position of UDIN for each branch with respect to certificate and report.
Mandatory, no two ways about it. UDIN mandatory.
To add it is, I think we'll have to generate 3 UDINs, one for all the certificate, one for the report, and one for the tax audit if you are doing. So the 3 certificates which will be required.
So next one, the
LFAR. It is LFAR closure.
IFR closure report not made available. LFAR. Okay, sorry, LFAR closure report not made available. Giving comment is sufficient or something we have to do? Please explain.
At the end of the day, LFAR is something for which it is an audit report. So the auditor has to close it. So there is no question of closure report not made available. We have to close it. So closure report is our responsibility. We must close it. So no question of closure report not available. Probably what I'm insinuating is that you're saying that we have not got representations, we have not got proper responses, or that they have not agreed to some of our observations and signed off. Yes, these are all possibilities. And if we have not got a representation, or we are not convinced about regarding evidence is given to us, please report. Certainly.
Jala will take 2 more questions and give a break for the next session. 2 more questions.
Okay. So next one. So how do we calculate planning materiality for bank? What would be the basis?
Again, materiality in itself is a very, very subjective topic, and we have very, very detailed literature, not just the essays, but also a lot of experts have written and spoken about materiality. So it may not be appropriate to give a one-size-fits-all answer for this, but it will have to be looked at from the perspective of the size of the branch, the size of the advances, the quantum of the deposits, the quantum of the income, expense, everything. All these will have to be kept in mind while we decide on the materiality levels for each of these. So right now, it may not be possible to say anything above 1 crore or anything above 2 crores and all that. We cannot say that. But typically, what we can say is that advances above 2 crores are considered, items which we must look into. LFAR also talks about it. Advances above 2 crores, separate report and all that. So thumb rule, you can say 2 crore, but it could be more or less.
Okay, sir. Thank you, sir. Sir, in most of the cases, all branch heads are saying everything is system generated and no manual. In the situation, what we have to do?
I think we should be happy that more that it is system generated, the better. In a bank audit, moment we see manual, we are worried. We see manual provisioning. We see manual override of NPA. We see manual, extension of packing credit loans and all that. And wherever things are manually done, we need to be worried. But then blindly, we cannot just somebody says system. They shouldn't scare us by saying that. So we should have enough technology understanding and tools and simple. I'm not talking about any high-end technology tool that we need to have, but with the minimum skill that we have and experience that we have and the training that we have, and thanks to all the sessions that we listen to, I'm sure we'll be able to build up some degree of understanding on system generator. And the guidance note also has a very whole segment on auditing in the CBS system. So read up from the guidance note, read up from other materials, go through presentations. You'll see a lot of presentations of various speakers online also on CBS environment, PowerPoint. So that's how we should also build up and learn. And the institute publication is also there on that. So, yeah.
Thank you, sir. Thank you so much, sir. You have explained all the details for this bank audit, and you personally explained all questions for answer for all the questions. Thank you so much, sir. Maybe the next session we will start with within 15 minutes. Maybe 11:30 we can start. Next session speaker, CA Ismail Sonawalla, will speak about advanced and IRAC norms. Members, maybe they can have coffee or tea, whatever available at home. You can have. Don't pressurize anything. Since the lockdown, so enjoy the next session.
You have to prepare and sip.
Yes. Maybe Vivek sir, our memento is pending with the SIRC. With next bank audit seminar, we will present to you.
No,
Thank you, sir.
I have accepted it. Thank you.
Thank you, sir. Thank you so much. Thank you, Chairman, for this wonderful opportunity given to me for sharing this thing. Session with Vivek sir. Thank you. Thank you, sir.
Thank you so much for the opportunity once again. DC Jalapati, thank you for a wonderful time. Thank you.